Apologies, we're a few minutes behind, but we had a bit of a technical problem here, but now we're back here. So again, without further ado, let's dive in. My name is Nabil Khan. The show is called Homeowner. Today, I'm very excited to join by a very recognized and distinguished individual from the market. And Harry, I had the pleasure of to go through to read your bio data, and I will be doing really injustice if I really walk you through. But I'll say a few big ticket items, and I really want to take a few minutes to talk about yourself and share your expertise as well. So again, Harry Iyer, are very successful. I'll read it from you because I don't want to miss anything. You have done so well. You are the CEO of your own tax franchise called Global Accounting and Financial Services. You also work closely, certified coach, teacher with the Maxwell Leadership Certified Team. You're also a founder of Success Forever Inc., and you're a distinguished Toastmaster individual as well. And at the same time, you're working as executive director of Maxwell Leadership as well. So again, phenomenal things you have done. So why don't you just stay a few minutes and talk about yourself?
Uh, Thank you, Nabil, for having me here on this live show. And about me, I came to Canada in 2002. And before coming to Canada, I was in Bombay, and I was a financial controller and India head for a Bahrain-based investment firm. And after coming to Canada, obviously, like any other person, I had my challenges getting a job, and with about 8, 9 qualifications on my resume, that was a big challenge. And so I ended up starting my own accounting company in 2005. And since 2005, I've been practicing accounting. And then in the process, I had a meeting with John Maxwell and Les Brown and got myself certified. And now I'm also training people in leadership, motivational self development. So it's basically helping all the businesses, helping changing people's lives.
Yeah, no, that's amazing. So for the audience today, we will. It's very timely because based on all your experiences, we like to pull up a little bit from the tax experience, right? Because
Yep.
as we know, this is a tax season, and in the mortgage business, there's a lot of individuals who are, buying investment properties and capital gains. So this happens to be a very common scenario with a lot of people. So I would like you to, spend the next few minutes about it, and you can also share your expertise. So, I'll particularly stick to investment property because there's a 30% market share, which is investors at this point in time, right? So what would you talk about, let's start very, very high level. Any taxes on special on investment properties clients should be aware of this point in time?
Yeah, obviously right now, because the market is going at a phenomenal rate, and so there are lots of people who are investing. There are lots of people who are investing in the market, and what I always tell people is, as an investor, preferably if you can have a holding company and try to hold the assets on a holding company, because the corporate tax is less compared to the personal taxes. And because going by the current market scenario, if one ends up selling a property, they end up paying huge taxes, and the taxes are as high as about 53, 54%. And
So you're saying capital gains can go up to 53, 54% if they sell a
yes,
property?
yeah, because
Wow.
let me give you an example. Let us say you most of the people who are investing in the market, uh, they are basically part-time investors. They already have a job or some businesses.
Right.
And if someone's having a job, and if let us say the income is about 100,000 plus, and if they end up having a capital gain of 200,000, which is on the lower side given the current market scenario, and at 50% half taxable rate, so that adds up to your existing income of 100,000 from salary, and at $200,000 you end up paying about 40% now.
Oh, wow. So this is actually a very good point, and I want all the listeners to hear this because, as you said, there's a lot of part-time investors who has a full-time job. So once they buy, so the capital gains and if they sell a property, capital gain goes along with their income as well. Is that what you're saying?
That's correct. That's correct.
Oh, wow. Okay. Well, that's a pretty significant amount. Just a quick point on this for all the listeners who are messaging me that we're not live on Instagram at this point in time. We're just still trying to, but we are going live on Facebook and LinkedIn. So Apologies for that. We will try to come on Instagram in a few minutes. If we can, then we probably will have to stick to this. We're trying to go there. However, let's come back to the meaning of capital gains, right? So you touched a really good point here. Um, in any specific interest, individual or not interest, taxes people pay on investment property once they have investment properties.
Sorry, come again.
So let's say if I have investment property, for example, and I bought a couple last year for argument's sake, is there any extra taxes I have to pay during my tax season now?
On the investment property, of course, you are paying the property tax.
Right.
That's the only thing. Again, once you have an investment property, you obviously, I'm sure you would have a rental income.
Okay.
Rental income, then you deduct all your expenses such as the mortgage interest, the property tax, the condo fees if it's a condominium, utilities if you're paying the utilities, insurance, some repairs and maintenance. Again, the repairs and maintenance cannot be a capital cost. It has to be a regular repairs and maintenance.
Yeah.
And again, you can also claim as motor vehicle expenses also here, because let us say you are in Mississauga or Brampton and your property is in Barrie or Niagara Falls.
Right.
You drive down maybe 10 times, you can claim some motor vehicle expenses.
Okay, that's pretty good.
Whatever the profits is there, it's added back to your income there.
Okay, so you make a very valid point, because a lot of listeners who listen to the show now or post show, they have bought properties in London, Ontario, and Windsor, and all those particular areas, right? And this is where you're saying there's more tax benefits they can also get through that way, right?
They can write off those expenses there. And then if someone is having say 3 or 4 properties and they have a property manager and they give them, let us say the normal say about 10 or 15% of the rental income, even the fees paid to the property manager is a tax write-off.
Nice, interesting. Okay, so before I dive into that, you touched base about the salary or something for the property manager, right? You talked about it. How else, individuals can, because this is the question which I've been asked when I look at life, that how can people actually save money on that particular, let's say, property manager or something? Is there a way they can save more taxes on that particular thing?
Yes, if in the property manager, let us say someone is there, a handyman in the family,
right,
and they can hire the person as a property manager and ask that person to do the repairs, collect the rent, pay that person some fees, and officially pay them the fees by check.
Right.
And see that the other person files his or her taxes as his or her income.
Got it.
So in case if CRA comes back, we have a supporting proof there.
Yeah, 100%. Yeah, that's a very valid point. Okay, so a couple of other things. I was trying to go on Instagram. Some people are not able to find us. Another question that comes in, because there's a lot of investors who are new, who bought last year in pandemic, right? And there's another question or conversation I was having with some individual, and talk to me about this. So if you have lived in your house, let's say, I'll give an example. Somebody give me the scenario. And then you lived there for a couple of years, and then you moved on to a new property, and you took the existing property as a as a rental out, right? Then you later on sell the property. Do you still have to pay taxes even though you lived there?
That's a good question. In fact, I get this regularly as my clients, they keep selling this property. See, what happens is, let us say, I'll give you an example in this. Let us say you bought this, your principal residency in say 2015.
Right.
And that is your principal residency from 2015 to say 2020.
Right.
And 20 you move to other property, and now you rent this principal residency.
Right.
So, and if you are selling this property in the next 2 years, this 2-year period will be treated as an investment property. You do get the exemption of the principal residency from 2015 to 2020.
Oh, interesting point.
Yeah.
Okay, well, that's very interesting for us to know, because so now for all the audience here, what you're saying is, if I have a property, one where I live, but then I move to an investment, a second property I buy, but this property is on rent where I was living, and the years, let's say, if I later on sell it, only a limited amount of period will be treated as capital gains, not full. Is that what I'm hearing?
That's correct. because the first 5 years will be treated as a principal residency,
Right.
and the day you move out of the principal residency and the day it is treated as a rental property,
Right.
you have to have an assessment of the value of the property. Let
Interesting.
us say if today I am moving from my principal residency, I am renting it out,
Right.
I have to get a market value of my property as on today.
Right. Okay.
So that will be treated as a deemed sale value in future.
That's actually a very critical point, and this is where I want the listeners to either come and talk to you or to an accounting firm, because the industry, this is a very norm that took place in last couple of years, because a
Yes,
lot of individuals bought properties and they did not sell their property, right? And what that did is now the tax season is coming, right? And in the meantime, let's say if someone even sold it, now they're realizing that I have to pay capital gains or capital gains. But there is some rules in there which, quite
yes.
frankly, not a lot of people know what you just mentioned at this point in time.
Yes, again, I want to again clarify because some people, what they do is they try to play with the CRA rules and they try to transfer this property to the spouse or to the kids for, say, $1 or $100. That is very dangerous
Okay. Oh,
because
okay.
CRA come back to you and they say that they will treat this property as a deemed sale at the market price.
Okay. Okay.
Yeah.
That's an interesting point. I think for all the listeners who are listening to the show now, I think stay close to Harry or the professional accountant who is giving you good advice, because this is a very interesting topic what we're doing today, Harry, because the investments of individuals have gone up very high in the market,
Yes.
and I don't think people have the tax logic at the back end of that, right? I think there's going to be a lot of so. Great point. Thank you so much for mentioning that. A couple other questions which I have for you, which I think some folks have sent it to me, is um, you know, you mentioned about you kind of touch base minimizing your capital gains a little bit. You talked about it, right? If somebody has sold the property, how can we minimize the capital gains? How about this? What do we do while we are in the same year before we get to the tax time? Is there anything we can do to minimize our gains?
Yes, you see, your capital gain arises only when you sell the property.
Right, right,
And when you are selling the property, you already purchased the property a few years ago,
right,
but during the last few years after you purchase, I'm
right,
sure you would have renovated your property. Maybe you would have done your basement, maybe you
right,
would have changed your roof or added a new furnace or AC.
right,
All those costs, they are
right,
treated as the capital cost. They'll be added to the purchase price, to the
right,
acquisition cost. So
right.
that would reduce your capital gains in future.
Perfect. Okay, Harry, how about this? I'm actually gonna take a minute
But
here.
one more thing. Again, you know what? When you are renovating your basement, especially let us say you are renovating your basement, it
Yes,
is costing you $50,000, $60,000.
yes,
If you paid cash for your basement,
right.
then you don't have a supporting for that.
Okay, let's talk a little bit about here, because a lot of people do this, what you just mentioned. So I really want you to take a second, and if somebody says that you have done basement in cash, and then what happens? Say that again.
Then when you sell the property, and because you let us say you spent about $80,000 on your basement,
Right,
typically this 80,000 is added to the value of your purchase price.
right,
But if you don't have a supporting, and if CRA comes to you
right.
and they want a proof for the $80,000 and you don't have
Hmm.
the proof, they will disallow it.
Oh, that's a very interesting point, because a lot of individuals are actually doing that, and that just seems to be a industry practice a little bit. So, what I'm actually going to do, a lot of my listeners on Instagram are constantly sending me messages. So, what I'll do, I'm actually going to go live on Instagram,
Okay,
and I'll put it live on the laptop so people can see us that way, right? I
no
just want to
problem. Yes.
give me 1 minute here. I don't want to have those people disappointed. They're messaging me, "Where are you?" And this is such a valuable information. I don't want them to miss, and I really want them to hear from you. So we'll just put you on live here for a second. I'll I want to make sure they can see you and probably hear from you as well. Okay, I know this is not the best solution today, but I think we'll try to make the most of what we can. There seems to be. I'm still not able to, Harry, get you joined in Instagram, so I'm just going to connect you like this. So
No problem. Yeah.
So I'm live. Let me see if I can probably have you join here. There seems to be some technical problem in. No, I cannot see you on Instagram. However, we are live and people are able to see you on the laptop. Again, for all the Instagram listeners, my apologies. There has to be a bit of a challenge today. So we are trying to laptop on our Instagram, on Facebook and LinkedIn. For Instagram, I'll connect my laptop because for some odd reason, it's not connecting
Yeah.
together. My apologies. We're live here, Radha. Yes, thank you. But I'm not able to find Harry here. So that's why I'm actually going to show you my laptop this way. Okay, perfect. Sincere apologies. Hope everybody can see Harry here um, to the best. This is probably not the best solution we were thinking, but we'll probably try to work with the most what we can, right?
Yeah.
Okay, Harry. Perfect. So let's stick to the topic of capital gains you were talking about. You were saying something if you're living in the house,
Mm-hmm.
and then what can be done while you're living in the house and you plan to sell the property or something like that. Let's talk about it.
Yeah. If you're living in the house and if you're planning to sell the property, try to get all the details, all the expenses that you incurred while you were living in the last few years. And let us say you renovated your basement, you purchased a furnace, air conditioner, and you changed your roof. All those would be added as your cost price, and that will help you in reducing your capital gains.
Right, right, perfect. Any you talked about property taxes, capital gain taxes, and now I'm still sticking to the logic of investment property, right?
Mhm.
Anything else from an investment property taxes I should be aware of when I go to the tax season now as a customer, let's say?
Yeah, if you have an investment property, obviously it's a rental income which you are generating, and your rental income, and then you can deduct all those expenses that you incur to earn the rental income, such as the mortgage interest, the property tax, the repairs and maintenance. Again, this will be the regular repairs and maintenance, not the capital assets.
Right,
For example, you are painting, or you are doing some minor plumbing work.
right.
So those are treated as a repairs and maintenance, condominium fees, insurance, mortgage interest,
Hmm.
and property manager fees. If you have many properties, if you have an accountant who is doing the accounting work for all your rental properties, you can
Right.
deduct those expenses. And
Okay.
even the travel cost, because these days you see people are investing in far off places. You go there to collect rent, you go there to repair your property. Those are all treated as an expense. So
Perfect. Yeah.
all these small expenses will reduce your
Yeah.
rental income, the net rental income.
Right.
And preferably if the property is owned by two people at least, instead of one
Okay.
individual. So
Okay.
this income would be distributed, it will be split between the both the spouses or any other person.
Well, that's a good advice, and I know we touch base and we cannot go too much detail into that, but I think joint ownership is also a key.
Yes.
And again, my apologies for all of my Instagram individuals. This is the best we can do. We're trying to work with the technology today, so I'm actually pointing you towards my laptop. This is where we're trying to go live. So, and every few seconds I'll try to see if there's a question that pops up. um, a lot of people are going into this thing called holdco. What is that, and why do people do holdco?
Yeah, basically holdco is holding company, and if you are buying an investment property on an individual name, and if you are selling it later on,
Okay.
the capital gain would be added to your personal income, and then you end up paying personal income tax. And for example, if your income is $100,000 and there is a say 200,000 capital gain, 50% of that is added to your income. So your overall taxable income is about $200,000.
Oh,
You end up paying about 40% tax on that.
oh, wow.
But on the other hand, if you hold the investments on a holding company, and the holding company is the owner of the property, the holding company takes the mortgage, everything is through the holding company, even the rental income goes to the holding company. So personally you are not liable at all anything. You are not liable for the interest, you're not liable for the rental income, you're not liable for the capital gains. When the holding company sells the property, that becomes the income of the holding company, and the holding company pays the taxes. Normally, the corporate tax is about 12%, but once you exceed a certain level, then the small business deductions disappears. And but anyhow, you still end up paying about 26-27% maximum taxes. You still save more taxes compared to your personal individual taxes.
So for holding company, Harry, does it have to be a minimum of any properties, or one property is enough for that?
I have people who have about say 5-6 properties, and they have 5-6 holding companies.
Oh, okay, very
So
interesting.
each company is having a different property, and so in case if they want to sell it, they can either sell the company or they can sell the property.
Oh wow. Okay, so I just want to quickly touch base with all of my Instagram users. If you can, I don't know if you probably heard that, but what we just found out is that for holding company, it doesn't have to be four, five, six properties. It can be one as well, and you can potentially use that, and that actually helps out in your tax bracket. Your tax bracket individually, if you are, then it's a higher side. Otherwise, it starts to go. And you actually make a very good point here, Harry, because this is where in our last, and again I'm focusing more on this a lot because in last 2 years we have seen a lot of investors who were not investors before because of the property they have
Yes,
bought, right? So I really want them to know that the whole co is a process for them to, Canadian government has provided them to work with the tax situation effectively, right? So
right.
yeah, yeah.
There is a question by Sandeep Kaur,
Okay.
and she says, "Can we move a property from owned personally to a holdco?" See, there are people who are doing it, but if CRA comes back to you, you will be
Right,
heavily penalized on that.
right,
And because when you transfer your property today to a holding company,
right,
CRA can treat it as a deemed sale,
right,
and then you end up paying those taxes even though you have not sold the property literally.
right.
So that's a very dangerous scenario. But I know there are people who are doing it, but it's very dangerous.
Okay, perfect. Yeah.
You can buy
Unpaid.
the property, like, yeah, if you're buying a property, I would suggest you buy the property in the company right in the very beginning.
Okay, another question from Ankit that we have is, I already moved to a new principal residence and the existing property, which is rental, having the mortgage in personal name. How to put that into the holding company?
I think that this is what exactly I answered earlier to Sandeep Kaur, because if you have an existing property in your individual name
Yeah,
and you try to transfer it to the holding company, it
yeah.
is treated as a deemed sale on the date of transfer. And
Hmm.
you, CRA, if they come for an audit, you might end up paying capital gain tax with penalties.
Hmm. So let's just take this question a little bit. So now let's say I'll take myself as an example. I have a property, a mortgage under my house, right? Now I move to a second house and I say that, it's my secondary. I get the mortgage under my name on the second property as well. But my first property where I was, I rent out now, right? It's an investment property. I rent out now. Mortgage is under personal. So you're saying that there's no way I can change the previous property where I was living to a holding company and change the mortgage under that name?
That's correct, because it amounts to a transfer of property from an individual to a corporate body.
Okay.
Because see, the reason is because I'll give an example, because there is if suppose let us say CRA allows it,
Right.
there can be a loophole in this.
Okay.
For example, as you mentioned, you have a property, you transfer this property to a holding company,
Right.
and the holding company, we both are the directors, and you quit as a director.
Right.
Now I am the sole director. Now this company is owned by me. I own the property
Okay. Yeah.
without even you selling the property to me.
Right.
So these were the loopholes which people used to do. They used to transfer this to the spouses for $1,
Right.
and
Okay.
CRA comes heavily on them.
Yeah. No. This is very timely and very effective. So anybody who's
and
here,
and you know what? Brampton has already done this 15 years ago.
okay, so that's a long old story, folks. It's been there, done that. For anybody on the Instagram here, the reason why you are in my hand because I'm putting it this way so you can hear exactly. We're not able to join from Instagram. My apologies. Okay, so yeah, stay close to your accountant. My message to all the listeners, because this is the perfect time for a lot of, and the reason I'm saying it, this is probably first time there's a lot of investors in the market who will be filing their taxes, Harry, because
Yes.
in last 2 years, Canadian real estate, the highest share right now is investors, and those are the
That's
people who are coming to file taxes. So I mean, it's good for them to know. Another question that comes in here from Tarun is, can landscaping cost be also added?
yes, because lands when you do landscaping, it increases the market value of your property,
Hmm. Okay.
and so that can be added to the purchase to the cost price. It will help you in the capital gains.
Mm, okay. Well,
But
okay.
again, you know what? If it's a minor expenses, for example, if you are cutting your grass, and let us say you cut your grass, you pay somebody every week, say $35. So those would be can be treated as a regular expenses if it's a rental property.
Okay.
But if
Perfect.
if you're increasing the market value by adding those fountains and extra costs, they are all capital costs.
Got it. Got it. Got it. Okay. Thank you. Ankit is saying thank you for the answer. So I wish I can keep you for as long as we want, but I know you're a very busy person, especially this time of the year. And I
Yeah.
sincerely thank you for taking the time out and joining this session, because it's very, very valuable and very lively. Just want to quickly make sure there's no question on Instagram at this point of time.
Actually, I want to add one more new thing because I'm not sure if it is already there, but it's there in the parliament.
Okay.
If anyone is selling the property within the first 12 months now,
Hmm.
the capital gain exemption may not be given to them. It is not yet approved, but it's there in the parliament.
Oh, so they're talking about this.
They
Wow.
are talking about it. Yes.
Okay. Perfect. Okay, this is somebody asked a question, and I don't know if you can answer that question, but is it a good time to buy another property now?
You
It's
know
it's a
what?
million dollar question,
It's a
right?
$1 million question because you always feel like if you study in fact I was reading a book of Donald Trump called The Art of Deal, and again what some people were saying whether it was a good time to buy property in 1980s, and
Right,
some people said the rates are very expensive in 1980s.
right, yeah, yeah. So you know what, Sandy, for this particular question, I will bring some real estate professionals to this
Right.
show as well, because they also have a lot of market research, and I don't want to take the thunder away from Harry. Harry is phenomenal, but they also do a lot of market research for everybody on Instagram as well. They do a lot of market research, and I'll get them involved as well, right? So. But probably take a last question from you, Harry. I know you are busy, and I sincerely thank you for staying a little bit here. But I think you answered that question already, but I think what is the capital gain taxes if the property is under a holding company? I think you kind of touched base
Yeah,
on
basically it's the same corporate tax is applicable to that, not the
that.
individual tax.
Okay, perfect. Okay, perfect.
You
The last question, which I probably will coming, I can see on the screen, is new law which came under regarding, you just talked about business income if the property is sold in 1 year. Is it for rental or primary
It is
residence?
for both, because
All
I
right.
know I know some people who sold primary residency three times in a year.
Oh, okay, okay, okay. So, wow. So you're saying there's something they're talking in the government about taxes about that?
Yes, so some of these points are there in the government, and again, any person who is buying the property in 2022,
Right.
the first time home buyer credit is being increased from 5,000 to $10,000.
Okay, well, interesting. So, Harry, you're a wealth of information, but that the time is not on our end, and I
Yeah.
really, really want you to stay as long as you want. But I really want the listeners to reach out to you if you have any questions, and this is the perfect time. Tax season is still here, folks.
Yes.
Why don't you just share your phone number for the audience if they can, hear it out, and probably call you after that,
Yeah, my phone number is 416
right?
473
Right,
5243. That's my cell number.
right.
If I'm not picking up your phone, just send me an SMS and I'll respond to you.
Awesome, perfect. Last question I'll quickly take from another listener here is Zafar Mehdi is asking, when do you think real estate market will come back? Hold on to this question, Zafar. At my next show, I'll probably call few of the real estate individuals. This is the perfect time for them to be in the market, and there is a lot of noise happening. For today, we chose text because it's a very text deadline, but I really want them to answer that question. They are the professional in the market. Harry and I have our expertise, and this is where I'll take a minute to talk about the purpose of the show. I want individuals to share their expertise where they're really good at, and they have years of experience like Harry and other people, right? I mean, I can talk about mortgages a little bit, but I really want some years of experience. Harry, last minute, any advice tax season about housing, real estate you want to give to these listeners?
You know what? From the tax point of view, again, file your taxes before the due date because the penalties. CRA is very aggressive these days in terms of penalties, and uh, again, there is no point. Some people say, can we file for a relief of penalties or interest? And normally, you don't get the approval because you have to prove that you have hardship, you are unable to eat, you don't have money to eat your food,
Oh wow.
and it's not that easy. So CRA very rarely waives the penalties and the interest. So file the taxes on time, and so far we in Canada we do not have any penalties uh, because for example in countries like India, if you do not file your taxes before the due date, you
Right.
lose some of the benefits.
Oh, okay. So we don't lose any benefits, just to
We are
confirm. Okay.
lucky. We,
Okay,
we
good.
are lucky. Yes.
Audience, I mean, not don't pass the deadline, but I mean, you don't lose the benefit. Just want to be clear,
Yeah.
right? So okay. Yeah. So file the taxes. Please stay extra time on this here with the tax season with the Harry or your accountant. But when you talk about your taxes here, because it just is a perfect time of the year. Taxes, a lot of new investors. Harry, any
Keep
last
keep
comment?
keep all the supporting documents because it's the CRAs nowadays they are very aggressive. They ask for the documents. If you don't have the documents, they are going to disallow the expenses.
Awesome. So all the Instagram listeners, I'll repeat it for you, is keep all the documents, keep all the information with you when the tax time come in. Harry, any last moment? All good. Anything else you want to quickly mention?
All good. That's it. Yeah. Good.
Okay, so on that note, we thank you all the listeners on all the different platforms. Our sincere apologies to all the Instagram listeners. We could not add Harry to this, but I tried to bring him to as much as I can. Hopefully, we'll do a better job next time. For all the FB and LinkedIn users, thank you for your questions and thank you for listening. And at the end, Harry, thank you so much for
Thank you
for
very much.
joining and taking your time. Okay, have a nice
Thank
day,
you.
and thank you
Thank you.
for everything. Yeah, take care.
Good night. Take care.
Let me just end the stream.